On a September morning in 2008, something terrifying happened. One of the oldest, most powerful banks in America, Lehman Brothers, filed for bankruptcy. In just hours, global markets started to collapse. Millions of people lost their jobs, their homes, their life savings. But what if I told you this crisis was decades in the making, and no one saw it coming? Or did they? The roots of the 2008 crisis go back to the dream of homeownership. Everyone wanted a house, and banks wanted to help, but they also wanted to profit. So they started offering loans to just about anyone. Even if you had bad credit, no savings, no job security, congratulations, you got a mortgage. These were called subprime loans, risky, unstable, and dangerous. But here's the twist. Banks didn't care if people could pay them back, because they weren't keeping the loans, they were selling them. They bundled thousands of these loans into complicated packages called mortgage-backed securities. These were sold to investors around the world as if they were safe. Spoiler alert, they weren't. Investment banks like Lehman Brothers, Bear Stearns, and others were making billions off these toxic assets. Rating agencies, who were supposed to be the watchdogs, were asleep at the wheel. They stamped these risky investments with AAA ratings, the safest possible. Imagine putting rotten eggs in a shiny box and selling it as gold. That's exactly what happened. As long as home prices kept rising, everything seemed fine. But then, housing prices started to fall. Suddenly people couldn't pay their mortgages. Foreclosures skyrocketed. Those fancy mortgage-backed securities, they were now worthless. And because they were everywhere, from pension funds to global banks, the damage was global. Lehman Brothers was one of the biggest investment banks in the US. When it collapsed, panic spread like wildfire. Stock markets plunged, credit froze, banks stopped lending to each other. People lined up at ATMs afraid they'd lose everything. It wasn't just Lehman. Bear Stearns had already been rescued earlier that year. AIG, one of the largest insurance companies, was next. It had insured many of those toxic investments. Now it couldn't pay up. It was like pulling one card out of a giant house of cards. Everything came crashing down. To stop the bleeding, the United States government took unprecedented action. In October 2008, Congress passed a $700 billion bailout plan called TARP to rescue the banks. The crash triggered the worst global recession since the Great Depression. In the United States alone, over 8 million jobs were lost. Home values plummeted. Foreclosures swept across the country like a storm. But it wasn't just America. Europe was hit hard. Developing countries suffered. Global trust in financial systems was shattered. Entire generations lost wealth. Retirement savings vanished. College dreams were delayed or canceled. The emotional toll, immeasurable. In the years after the crisis, governments introduced new laws to prevent another meltdown. Banks now face stricter rules. Risky trading was limited. Consumers became more aware. But have we really learned our lesson? Debt is rising again. Some experts warn that new bubbles are forming in housing, student loans, even crypto. The 2008 crisis wasn't just a financial story, it was a human story. A story of greed, failure, and survival. If we forget what happened, we risk repeating it. So the next time someone tells you everything's fine, remember Lehman. Remember the millions who suffered. And most importantly, stay informed.